Hello, and welcome to the Bank Tellers podcast brought to you by Money 2020, where we speak to senior leaders from banks around the world. My name is Micky Tesfaye, the content manager for Money 2020 Europe. And in this episode, we're joined by Richard Davies, the CEO of Allica Bank. Welcome to the show, Richard. Perhaps to kick things off, you could briefly give us an introduction of yourself and your bank to our listeners, and maybe you could tell us a little bit about your bank's journey, where you stand today in terms of size, asset size, focus area.
Yeah, sure. So, just quickly on myself, I've had a kind of career that's done quite a lot of time in the major UK banks, places like Barclays, but also with some of the new fintechs in the UK. So, I helped set up Oak North Bank back in 2013-14, and then I was the COO of Revolut back in 2019-20 before I came to Allica. So, Allica, we were we're quite a new bank in the UK. We launched, our first loan was done in March of 2020, so just as COVID hit. We focus exclusively on what we call established businesses or established SMBs. So these tend to be businesses with 5 to 250 employees. And we kind of feel they sit between the sort of two main business models of the major banks, which are the kind of mass market consumer and micro business market, where there's millions of customers, fairly simple customers, and then the high value large corporate market, where there's very few customers, very high complexity. Whereas this piece in the middle's got quite a lot of customers. In the UK, about 500,000 customers, but they're all somewhat complex. They all look like sort of mini corporates. So yeah, we exist kind of solely to serve that segment. We've been building a full service range of products for that. So we do all types of lending, checking or current accounts, depending on where in the world, cards, savings. So kind of all the products for that segment. And yes, it's gone pretty well. So we're actually the fastest growing company in the UK across any sector of the economy over the last 4 years, and the fastest growing fintech in UK history. So yeah, it seems to have had some traction, but like we've only really just got started, I'd say, overall. So lots more growth to go, hopefully.
That's an incredible story to be, the fastest growing company across any sector, and also the fastest growing fintech in UK history, because obviously the UK is also such a big fintech hub. I guess, when you were talking, Richard, you said one of your early career places after the big banks was Oak North. And I remember, a few years ago covering Oak North, and they had identified a specific gap, right? It was kind of that, not the small size, but the mid-sized sector, and the lack of like capital for those businesses. I guess with Allica Bank, why was your focus on, your current segment? What was the driver behind that?
Yeah, and I guess when I was involved in setting up Oak North, I guess probably had I stayed there, I probably have tried to push into where Allica is today, because I think it's always been for me a segment that's underserved. And this we probably operate a little bit below where Oak North are. Great business, Oak North, right? I mean, done some amazing work on sort of mid-sized lending, so I don't know, £10 million or £25 million type loans. So yeah, they kind of operate a bit above us, where our typical loan size is £500,000 or £1.5 million. Yeah, I mean, why this segment? So I have kind of like a deep passion for it. It's a third of our economy and like jobs and society in the UK. Should be where a lot of the sort of productivity and economic growth comes from, but is sort of weirdly neglected by pretty much everyone, actually, the major banks and the fintechs alike. So for us, yeah, that's just almost kind of real mission to try and help that bit of quite a large bit of our country. So yeah, we sort of get pretty fired up about how we can do better experience for that customer segment, how we can make access to finance easier, how we can provide better value on savings, and just generally try and help, I guess, that that bit of our economy do better.
I mean, that's a fascinating kind of reason and justification, right? Because I think, as you said, it's such a big sector of the economy, and yet that sector seems to be so overlooked. I know you guys have, you said you started your first loan was in 2020, so just about 4 years ago. But over that 4 year period, has there been a particular challenge or opportunity that's shaped where you guys are today?
So I think our strategy has remained very consistent. We've had this kind of theory that bit in the middle of corporate and mass market was underserved, and I think initially, right, you need to raise capital from investors, whatever. That's like a theory. You've got no proof points. There's sort of a challenge up front about getting people to believe. As time's gone on, I think we've seen the proof points, which is good. I think the challenge that exists throughout is I'd say really one of execution. So if your strategy is right, it does still come down to great execution because so many companies, right? The strategy is good, but they just can't execute. So I think about that super hard, and for me, it's something you're never ever done on. As a company gets bigger, you need to keep thinking super hard about how do you organize, where does decision rights sit, how do you refactor technical architecture, all these things that without constant work make the business slow down and essentially end up sadly many large companies where it's very, very hard to get anything done. And I kind of have a real passion belief that speed of quality execution is the single biggest determinant of company success. The faster you can go through the cycle of get some feedback, work out there's an issue, work out the options and execute an option. Just the more you win, right? Because that gap between you and everyone else just gets bigger and bigger over time.
Yeah, I mean, I think that's such a great point, and I feel like when you were speaking there, Richard, my mind just went to that real challenge between knowing what to do and how to actually do it, and I think that definitely being able to execute seems to be a key to unlocking that. You guys are, as we said, the fastest growing company in the UK, fastest growing fintech in the UK. I know we said that your segment you're serving focused on right now, that gap, that space between the mass market and the corporate is underserved. But just building products doesn't mean you get customers. So what is it about your business, do you think, that is getting such traction with the user base? What is that secret sauce that keeps on validating the customer need, do you think?
Yeah, I think it's a really good question because it's particularly the case with this target segment, because all of these are established businesses. They've been in business 5 years, 15 years, whatever. They all clearly already have got some form of banking relationships. So whereas if you're kind of doing brand new startups, you start a company, you need to find a bank, right? You've got a natural flow of people looking every single day of the week. That's not the case. And in fact, in this segment, because there's been very few options historically, and the options all look like a high street major bank, people haven't really been accustomed to going and searching for anything new because you were kind of conditioned that for decades there wasn't really much choice. So that's kind of been one of the biggest problems for us to solve. I guess point one on that is we build every product to be an acquisition product. You often hear fintech companies talk about this is our wedge product, and then we try and cross sell. We don't do that, right? We every single product we acquire onto. So they're all meant to be very attractive, entry products for a customer. And I think that's important, right? Because we started with lending, great. when customers want a loan, they really care about it. It often really makes a difference to the hopes and dreams of their business. But they might take a loan every like 2 to 5 years. So your addressable market is therefore shrunk. Like you move into checking accounts and savings accounts, like every single business needs one of those, right? And so how do you provide things that are compelling for them to just maybe even just try you out, right? Not switch all their banking across, right? But get started with us. So yeah, we think hard about how does every product be something we can acquire onto. And then I think, how do you create great customer experience or great experience with some of the like key people that work with customers, accountants, brokers, and others. Kind of the North Star metric for the company overall is sort of recommendation. So how can we be like massively recommended out there, which I think means having great customer experience, products people love, so they recommend, and like that's the best form of growth. I mean, I was at Revolut right before this, and that they certainly in their first few years, they may be spending more on marketing now, but like in the first few years, right, there was so much sort of growth driven by word of mouth because just the product was outstanding.
I think you made 2 points that really are so fascinating to me. I love that point you made around like building products to be acquisition products, because I think at least within like the retail financial services space, so much of what we've seen has been building wedge products, right? Like free consumer accounts or foreign exchange perks that hopefully would then translate into long-term usage. So I think that the way that you started is kind of flips that on its head, which I wonder, does that give you some challenges at the beginning with the traction, for instance, because you have to, lending products, for instance, historically are not easy to build at versus a prepaid account. So I guess, is it an opportunity cost in the short run? Maybe it's more challenging, but the payoff in the long term is that much more significant.
Yeah, I guess it's definitely easier to acquire higher volumes of customers onto like payment products than lending. Equally, like lending products generally have a shorter path to profitability because you make higher revenue per product. But I guess probably the hardest thing actually for us has been the fact we haven't just tried to do one product. We've basically said, look, from the outset, we'll build all the products. And so it's been that kind of point of how do you execute in parallel the build of all the products over like a 3 to 4 year period, which I'm pretty sure is like the shortest anyone's ever done in history. So like that's it comes back to the execution point of how do you stand up that full breadth of products the client wants over a very short space of time. That's definitely been, I think, the hardest thing. And yeah, we continue to invest pretty hard in everything we've got. We don't think they're done at all. We think they can all be made a lot better, but it seems at least that customers like where we've got to so far.
For sure, the numbers don't lie, as they say, right? In terms of, I think, when you're talking about around like the way you're building products and making sure, I guess, you have that full suite and stack. Is there a kind of process that you evaluate it to, right? Like, is there a process you use to figure out what, will move the needle for your customers and how to integrate, the things that they need more, and how to kind of differentiate between, I guess, what internally you might think that customer base might want versus actually what that end user does want? I feel like sometimes there tends to be that gap, right?
Yeah, agreed, right? I mean, listen, I don't think there's a sort of single good answer to this. There's certainly been a bunch of stuff we've done that's like, I don't know, classic thing from sort of like the founder CEO type person, right? The sort of, I think this is a great idea, let's do it. I mean, some of those have been absolutely terrible. I can definitely say, right? Like, I think I've got the prize for the worst new product we've done in history, like in terms of like zero customer uptake whatsoever for this new product. So
And I have to let
I
us in.
can't share like bad ideas, right? So definitely that kind of, hopefully a few good ones as well. But like, there's kind of like that sort of, there's always a bit of that, right? I think in any sort of young company. I mean, what we are trying to do more and more as we get kind of bigger is use the kind of Amazon type model of single threaded teams where you have a cross functional team focused on product or service X, and they are they've kind of got overall goals that sort of add up to the company's goals, but they're sort of empowered to do whatever makes most sense to hit those goals. And that's generally quite good way of doing things, because then they're generally pretty close to what's going on in terms of customer feedback on that product, like putting in place analytics on the journeys to see what's not working, getting internal feedback from staff, and looking to piece that together into what's the next thing to do, right? What's the next most sensible thing? So quite a big fan of that. So we've got close to 20 different teams there currently working across, and there's still a bit of that top down, and I have a random good idea or bad idea, but hopefully it's mostly kind of bottom up from people that are sort of really close to that individual service.
I mean, I think that's like it's fascinating because obviously, like I don't know if you've seen the last few days, right? There's been that whole conversation that's been happening on Twitter and online around the founder mode versus management mode way of being leading modern companies, right? And I guess perhaps you can speak to this, a lot more than many others could, given also your background in like that traditional established UK banking structure. Are there, from your experience, and because a lot of the times, right, the way that financial services, at least the traditional companies, are classified as being quite slow with innovation and having that kind of inability to really move fast, be able to, from your experience as leading the fastest growing fintech, being able to iterate and produce products really quick. What's the big gap? What's the big barrier, do you think, that differentiates these two, like that inertia in established banking environments versus, the newer kind of upstarts like yourselves?
Yeah, I mean, I think in large companies, there's multiple forms of legacy that really hurt, right? There's clearly legacy technology that everyone talks about, and that's true. As there's also legacy kind of cultural pieces, management practices, which is kind of perhaps what you're referring to in terms of that Paul Graham piece. Come back to that. And then I'd say there's also kind of legacy P&L, right, which also plays a part, where if you kind of think about the attack vector of Revolut, of FX and international payments, big cash cow for retail banks, right? Because they were ripping people off with like 3% fees on everything they did FX wise. Revolut comes in and does that for like near free. Anyone that's using FX moves to Revolut, and you could respond to that by changing the price, but you would take out a big chunk of P&L, and everyone's paid bonuses each year, right, against their P&L, and no one's going to do that. You'd rather bleed every year than you would to take the pain, right, of actually changing it. And so I think that's what often you see, right? It can be tech-wise legacy, but it's often legacy culture or legacy P&L that hold things back as much as it is tech. On the Paul Graham thing, I mean, I'm not sure I totally agree with it, right, that it's a new thing, or I know got quite a bit of debate started. And I think in the thing he talked about, no one studied it. Again, I don't agree with that. There's a book written called The Geek Way, where I forget who the author is, but they've written a good study, right, of what are the sort of common traits of Airbnb, Amazon, Apple, Google, kind of studying a bunch of tech growth companies. And actually, it's a pretty good study, right, that sort of tries to break apart some of the things that are non-traditional and have made these companies successful. And I certainly found it a pretty interesting read, right? So I think there's been quite a bit of study of what sort of founder mode looks like already. I certainly would agree that a lot of traditional stuff doesn't work very well. Though, again, I think Paul sort of alludes to, it's all about micromanagement from the founder. I don't think that's true, actually, right? Yes, maybe an Apple, maybe. But for every Steve Jobs story, you've got a Jeff Bezos Amazon story, right? Where sure, he was a bit of a control freak, but he created these single-threaded teams that massively empowered an incredible breadth of organization, right? The sort of Amazon's a crazy, amazing organization because it's kind of doing so many things, so many geographies, product lines that go from cloud services to book selling, and segments that go from like consumer to small business to enterprise, right? It kind of does everything, which when you think about sort of how you execute at speed across that many dimensions is pretty crazy, actually.
Yeah, I mean, I think such a fascinating point, and I love the segue too, right? Because I think the point around Amazon I find particularly interesting, right? Is, or one of the things I should say, is that quote from Bezos around, the heuristic about great teams should have like no more than one, is it two pizzas should feed
Two
it.
pizza, yeah, two pizza, yeah.
And I kind of like heuristics like that, because I think obviously they're not hard and fast rules, but I think they kind of give a sense of how leaders think about, the way their organizations and their relation to them. And I guess that Paul Graham piece alludes to that too a little bit. I think Brian Chesky's point was more about, I guess, how he feels about the product and his involvement with it. But from your perspective, do you have any kind of heuristics that you rely on as a company that's growing so fast? You're knocking on these big established players' doors, and you're scaling so rapidly. Are there any kind of heuristics you use to kind of give you a sense that the growth culturally too, right, is how you want it to happen? Because at such a pace like that, I imagine it's difficult to kind of maintain the energy and that productive way of what's got you here, right?
Yeah, I'd say we're still like, I'm certainly still always trying to learn, stay open-minded, understand where we are, how we can improve. So yeah, I certainly don't think we are like this amazing example, right? That I'm just going to kind of state this is how it works and everyone should copy it. No way. I'm sort of always looking for what great looks like somewhere else, right? That I can learn from. And I think there's something there actually culturally, actually, that if I'm going to say one thing, it's that while being positive about the fact you're doing well, never be satisfied with where you are. Right? I think, again, probably if there's anyone ever sort of go back to it, it is Amazon and Bezos. Like, I love the sort of day one versus day two mantra of like, it's always day one means like you're always trying to invent new, trying to improve. Like day two is sort of, hey, we're doing great. Like we're on cruise control. And yeah, if you can keep open-minded about the fact that you're not that great, like you need to improve, that applies to everything, right? Be it customer experience, be it product, be it how you organize the company, what the technical architecture is. I think that in a company's culture is almost the most important thing. Because if you ever lose that, you are sort of in that. I think Bezos described day two as like the slow, inexorable decline into stagnation and then death, which sort of is true, right? I think there's a study of like companies that were in the Fortune 500 in like 100 years ago to now, and it's like 20% of something is still there. So, yeah, how do you keep yourself young, right, and keep yourself thinking you're frankly you're not good enough, right? You need to improve more.
Yeah, I feel like it's that. It seems like it's that balance of being anxious enough to feel like what you've done is not good enough, and yet being confident enough you're on the right journey, right? Like it's that balance. It sounds like.
Yeah.
I guess we talked a bit about some interesting piece of advice around how to think about organizational leadership and financial services too. But if, is there like one piece of advice, Richard, for you that has shaped your career quite a bit that you could think of, or at least a viewpoint or way of thinking about the world of financial services and tech and what you're doing?
Hard to say, right? One single thing. I definitely a big believer in how do you get more data than just opinion to underpin what you do. Definitely a big believer in how do you break things down so you're not you break down problems into pieces to solve it well. You don't just try and solve the whole thing in one go. That kind of iterative approach, right? Breaking things down, iterating. That applies to org as well in terms of like, yeah. I guess a lot of the learnings, I guess, that come out of you read most bits of studies of many organizations over the last 2 decades, right? It tends to be the stuff that comes out. So not just any one piece of advice from any one person, but you read books on, I don't know, like the Gulf War and then like military forces in Afghanistan, right? That they talk about some of this stuff as to how conventional command and control of large armies just completely failed and had to move to a very different model. Or you can read exactly the same about how some of the sort of tech growth companies of the last 2 decades have organized. Or so I'm kind of fascinated by that sort of dimension of how do you deliver, how do you execute successfully ultimately, right? It comes back to that. And again, it's probably not in the last 2 decades. I think there's like a famous book called the Mythical Man Month from a software development point of view, right? And I guess it's the classic nonsense historically of command and control saying, like, we have this large project we're going to try and do is one large project. We estimate it's 10,000 man months of work. So we can put like 1,000 people on it, and so it'll take 10 months. And like 1,000 people is super hard to mobilize and coordinate. And like you probably waste half the effort in coordination. And guess what? It never takes 10 months. It may have never happened at all, right? Because it was too big a program with too many people. And you're just like, it just doesn't work that way, right? You'd be better off with 30 people working on it and break it into bite-sized chunks. And maybe it takes 2 or 3 years than pretending that you can have a mass army go and solve it in a short period.
Yeah, I love that. I mean, I think it's just like, that's one of the most fascinating things about humans, right? Like humans are not like numbers, like we don't add up like just the way that numbers do. And I think sometimes that can easily get lost. It reminds me of like a little bit like of like the story that's getting super famous nowadays of like Dave Brailsford and like what the work that they were doing and like Team Sky, for example, and how like also you can find some really good insights and inspiration in different pockets, right? Like that can really help shape how you deal with an organization. I know we've been talking for like 25 minutes, so coming to the end of our chat today, but maybe I thought I'd ask you a couple of quick fire questions and put you on the spot, Richard.
Sure.
Let's see how you deal with these. So first one is, if you weren't in banking, what career would you have pursued?
Is this like ignoring my talent level, or
Whatever you feel like is the
when I was
right.
a kid, right, I'd love to have like been a professional cricketer, but yeah, talent wasn't good enough.
Professional cricket is, I feel like that's quite far away from financial services, but
Yeah, and I love cricket, right? But I just, my skill level wasn't good enough. So anyway, there was no chance of that ever quite happening. I played a lot, but never quite good enough. So yeah, but I would have loved to have done that. Would have been a lot of
well, hopefully we might see an Allica Bank sponsorship at Lords soon. You never know. Describe your leadership style in 3 words.
fun. It's always dangerous when you describe yourself, right? I'm pretty sure people would say driven, energetic, hopefully always kind of open at that point of transparency. But I always kind of think it's best judged by other people, not yourself.
No, that's a great point. But I love those 3 as well. They're like superpowers. What's the first app you check in the morning?
First app I check. Oh, good question. I think it varies actually, right? Because I go notifications and then see like depends what the notifications are actually. So yeah, it's probably some combination of WhatsApp, LinkedIn, or actually Financial Times, or maybe Sky Sports. But it depends what sort of
Nice.
notification grabs my attention.
If you had said emails, I would have said yes. Your management mode leadership 100%. But I could
Actually,
tell.
I don't do email notifications actually. Like I sort of used to, but I've turned those off so that I kind of I dive in and like I hate having lots of like unread emails, so I try and clear it down quite ruthlessly. Much worse than things like LinkedIn. But yeah, no, I turn off email notifications so you're not constantly like on the crack cocaine of the drip feed of
Yeah,
emails or Slack messages or whatever.
I think that's probably one of the best hacks I've heard for like just how to be like very a productive person is like to turn off notifications and just like have a set time to check them because
Yeah, or I don't do it on I don't do it on LinkedIn or or Sky Sports, right? So I'm still getting dragged into other stuff.
no, yeah, I hear you. Awesome. All right, last question. What's the one message you'd like to leave our listeners with today?
I think the thing I say to people in their careers in general, right, is make sure you enjoy what you do. Like, I love this job. It's like the most fun I've had in my career. And in general, I've enjoyed my jobs in my career right now. It's so great when you can have some intersection of kind of feeling of purpose, with like sense of having fun day to day, with kind of doing well kind of as a company. I think that's great, right? So yeah, enjoy what you do. Don't sit around in the job for too long if you don't enjoy it.
I think that's a great piece of advice for everyone, right? Like just not just in Korea. Thank you, Richard. That was an awesome conversation. I had so much fun and learned so much about both Allica Bank and your incredible journey and your background too. To all of our listeners, thank you for tuning in. Stay connected for our next episode where we'll continue to explore the future of banking with more thought leaders and industry experts. Until then, keep innovating and pushing the boundaries of what's possible. Thank you.